Hey, welcome to the TRG podcast. I have one of the young guns with me, Lloyd here, and his buddy Aaron. Is it Blasinsky?
Correct.
Okay, is it Polish?
Yes, sir.
Okay, pierogies?
Oh, yeah.
We down with pierogies?
Oh, yeah. Oh, yeah.
Okay, so my grandma was a Stakowski. Her sister married a Dombrowski. And there might be another ski somewhere.
I'm sure there is.
I'm
Usually.
Polish. I'm Polish, I think. I think that's how it works. If your grandmother's Polish.
I'm pretty sure last podcast, we talked about me being Hungarian. I'm pretty sure. At least maybe on the radio show.
No, I said that this guy converted to Italian for his
was.
love of Fibonacci.
That's right, Fibonacci, and then also my new haircut, I guess.
Your new haircut?
Italian. I don't know. I guess that's what they're saying.
You look like one of those guys, except for you'd be like the weak mafia guy.
Basically.
Okay. The world's softest
trying to get bigger.
Mafia guy. But no, man, it's welcome. Aaron, you work with Fairport Financial?
Fairport Wealth.
Fairport Wealth.
Boomer Wealth, yep.
Okay, and what do you do for them?
Portfolio administrator.
Portfolio administrator. What does that mean?
So wear a lot of different hats, being a smaller firm, employee-wise, which I love, being on a smaller investment team, wear a lot of different hats. The way I sum it up to people is all revolves around trading, executing trades for clients. That's what I do every single day.
So is he like our Robbie Markets?
I think he's like our Robbie Markets.
Man, you're the trade wizard.
So, yeah, and the trading side and then everything that leads up to the trade, helping the investment team, get the market data, get the client data that we need to execute the trades and, basically fit with their model and their risk tolerance and, their objective.
So
volume.
So at the end
we do put it down in the markets. I'll tell you that.
But my thought is we have a Robbie Markets. What's your nickname? Is it Awesome Aaron?
I won't say my nickname from Fairport because it's kind of
All right.
it's not bad, but
we'll leave it alone. So you went to
it's not politically incorrect. It's just like I don't want to say it.
So you went to West Virginia, right?
Correct.
And then you're what's it, Muskingum or?
I was Muskingum. Yeah, you never heard of it.
But he's
before.
from West Virginia.
Wow.
I'm close to West Virginia. Yeah, I grew up on the Ohio side, but on the border of West Virginia.
Muskingum's like a Division 42 school.
Basically, 1,200 kids.
They put together a football team, but it actually only had 4 players on it. Good team. They went undefeated because they didn't play anybody.
It's like it's a high school. It's a high school that competes in the NCAA.
Right.
Good academics, though.
All right. So you're West Virginia, and then you're Willoughby South. So it's a Rebel, right?
Yes.
Okay. So and you came back to Ohio to work here, and at the end of the day, you've bounced around. My curiosity is obviously because I'm both of your ages combined. I'm still probably almost older than you. What do you feel that the younger generation thinks about when it comes to this economy? Do you think they're even acknowledging it? Do you guys have a lot of friends that are losing their jobs?
When you say younger generation, you mean like our generation?
Yeah, well, you're 24 years old, right?
Yeah.
Okay.
Well, there is one below us, believe it or not, the high school gang, but
What's that even called?
They're
Gen Z, right?
Gen Z.
Yeah,
They're
Gen Z.
definitely not.
I'm just quickly talking about you guys because everyone has a different point of view. Like I'll have someone in next week, that's a little older than me. She's an author, and then I'll ask her viewpoint. Because obviously everyone has a different thought process. You're going to bars and restaurants. I'm not. Right.
Yeah.
So with this economy, everyone's going to have a different approach to what's happening. And I'm just curious, do you feel that your friends are being frugal, thoughtful, or do you think they're kind of like, I'm 24, I'm having a good time?
Well, I guess I'll start.
Yeah.
I think a lot of people are not really thinking about it until it impacts them. So, for example, I was with a buddy last weekend, and we were driving for Memorial Day weekend to go hang out with some friends, and he thought his job was totally fine, and he gets a call on the way, and they had a conference call that morning, and everyone mandatory 2-week furlough, and it just hit him like a brick wall. He's like, I was not expecting this, and he was rattled. He's got to apply for unemployment now. It's kind of one of those things that's like in the back of your mind until it really is in front of you, and I think I know some guys that were graduating this year that are just. The job market's pretty much dried up for them for new grads. No one's really hiring, and now they're going on to get MBAs. So I think it's hitting us probably on a harder level than maybe someone who's more secure.
So economically, there was actually a study that I read that showed the worst job growth or GDP growth in history. So if you go back even, and there is, people, I'm talking from like 1800s on, because they were saying how the millennials have it the worst. And I was like, what?
Yeah.
I'm like, if this happened when I was a kid in the 80s, you know how bored I would be?
Yeah, right.
I've got every streaming service possible.
Yeah.
You know, it's like I've got all these different things I can be doing, but then I looked at and they're talking about job growth and creation, and it is a more difficult market, and you have to be, I guess, more open to doing something different in order to succeed. Right. Me, for example, I was that guy, right? So you guys have 47 degrees between the two of you, and I have none. Yeah. Okay, I have all work experience. When I was beginning my career, that's what I always say. I worked for a cable company in my teens. I was running lines, and then from there someone discovered me and said, hey, do you want to come work for the IBEW as a tradesman? Sure. Okay, that's the International Brotherhood of Electrical Workers. Yeah. And when I got laid off from that, I did concrete work in Medina, Ohio. When I didn't have concrete work in Medina, Ohio, I picked up roofing jobs. Right? When I didn't have roofing jobs, I delivered pizzas. Right?
And those jobs are the most abundant today.
Yeah. Right. But you can make money if you hustle. But I think the thing I was digging at is you said you had a friend, there goes my computer going off, you had a friend who basically was like, I'm going to do my thing until something happens.
Right.
Right? So I don't think that's a good thought process to have. I'm a more conservative person, and I think that there's going to be a large swath of people that don't know what to do when there's no jobs.
Right.
Right?
I think
and they're unwilling because they have a degree or a pedigree that puts them on a pedestal in their own mind.
Well, it's like the other guys I said, they're just going to go get their MBA. They're going to go dig themselves into more debt.
Oh, that's cool.
Unfortunately, I don't look like I agree with you. That's not the way to do it.
Right.
Because it's showing that MBAs are becoming worth less and less.
Well, there's two things. So I would disagree with maybe your kind of point. I think that most people our age, at least in the 22 to 28 range, have not really felt any pain from this situation. The reason I say that is because
they don't have to pay their student loans right now.
Well, that's one.
That is great.
But because before the situation happened, unemployment rate was 3.6%. So a lot of people, younger people, were having trouble finding jobs anyway because it was
14.7 right now.
And now it's at 14.7, and nobody's really hiring because they're so uncertain for the future. So a lot of the people didn't have jobs, or if they did have jobs and they got unemployed, a lot of these lower paying wages jobs are actually, they're making more money on unemployment than they are actually working their jobs. So I don't think the younger generation really has felt the pain at all.
Because they were never really in a good spot.
They were never in a good spot in the first place, at least 22 and 28
So when you're already low,
I'm saying when you're
already low, you can't really fall too much further.
I think the older millennial maybe has felt the pain, but the younger millennial and all of Gen Z
because the older millennials started a family.
Absolutely.
So things have changed. And I was reading another study where they talked about the amount of people at Fidelity that took out the max withdrawal from their 401ks.
Which is not a good thing.
8,500 individuals, which in the grand scheme of things, when you have 330 million in your population and only 8,500 took out the max, but that's nearly $1 billion that was removed from 401ks just to survive. So I always tend to think that if there's even 8,500 people removing that much wealth from the markets just to exist, and we have jobs that aren't going to come back. If we're at, like I said, 14.7%, in Ohio we're 16.8% unemployment, we don't know if we're going to have the continuation of PUA. I mean, Rob Portman got on yesterday and was talking about giving people on the minimum wage a bonus to go back to work, which is probably the most reasonable thing I've heard. But again, how long can you continue those programs? Because it sounds like no matter when you cut off the drip and supply of cash flow, it's going to hurt the economy, especially the consumer, right? So printing money right now, fun, helping a lot of people.
When's too much, though? That's the question.
Right, and that's where we talk about other shows of my, like my radio show or the other podcasts, is there's a massive disconnect between market values and what's actually happening economically. Would you agree?
Yeah, for sure. I think talking about that kind of stuff, if you go on Twitter, it looks like there's a lot of economists that are just really frustrated right now.
What's Twitter? I'm old.
It's a thing getting regulated by Trump now.
Yeah, it's where the government, the White House does their press releases. So
okay. I wasn't aware of that.
If you ever wanted to tune in.
It's basically where everybody accesses information nowadays.
Wow.
Yeah. But anyway, I mean, you can tell they're kind of frustrated because it's just like going two opposite directions. But I'm in the camp of, when does the bill come due? I mean, I believe there's no such thing as free lunch. And we've, over the last, however many years after, 1971, we've kind of just convinced ourselves that's okay. That's cool. Take out that max mortgage. Get the biggest house you possibly can. I mean, people don't really realize before that wasn't really a thing. Yeah. People saved up their money. They put down as much as they could. Maybe their parents had to help them out. Now it's like, Johnny, just go get, go down to the bank. Yeah. They'll give it to you.
Well, you got to think right now, home values are propped only because interest rates are low, right? There's no inventory. And if there's no inventory, interest rates are low and people are refinancing, and they're basically pushing off payments to postpone foreclosures, right? So there's going to be a collapse in those kind of markets that we can't even predict. Right. Yep. So that's what I find fascinating when I talk to younger people is, what are you guys thinking about? I mean, Joe, your partner in the Young Guns, he just bought a house, right? And you're going to have people next year probably buying houses at a discount.
I'm looking to buy a house next year at a discount.
Right? As am I. I have a great house in Seven Hills. It's a nice little ranch on a half an acre with a giant deck. I've got my man shed next to this swing set for my daughter that I built. I've managed to create a diversion where the water goes to the back only, so the dry spots for the stuff we use. Yep.
We'll have to go check that out.
Yeah, what do you say? We'll have to go swing.
One of these weekends, huh?
Yeah, right.
I swing on it. Yeah. I swing on it, man. I do pull-ups off of it too.
Yeah, good workout.
Yeah, it's great. But there's so many issues economically. Jerome's on today talking about Jerome Powell. That there's still enough firepower and they're comfortable where they are today. But I cannot fathom just money.
The problem is there's always firepower. They're always going to say they have firepower because they can just print more money. So theoretically, you always have
to what damage of the economy?
To what the damage of? It's always the next generation, right? The next generation is going to pay it back, right?
You
so
guys
our generation,
you're in trouble.
We're going to say that, but then we're going to say we're going to pass it on Gen Zs, and then Gen Zs are going to say we're going to pass it on to the next generation. So it's like an unlimited effect, and that's why there's an issue. When is the bubble going to burst?
The other thing I'll say about that is the reason why they can print so much, and this is something our fixed income managers talks about is. We're still, everyone's doing this. So we're still the best house on a bad street as far as buying U.S. Treasuries. Mm-hmm. So we had that leg up. But that's really the paradigm that's going to have to change before we really start seeing we can't really keep this show going.
So the caveat, when it comes to being the best house on a bad street is you can't sell your best house, right? Because you're the most expensive house on the street. Yeah. So that's where you have to look at it and go, yeah, we're still the best, but then what? Right.
I mean, yeah. When the buck stops, it's going to be ugly.
It's going to stop. And that's why when I preach about getting second opinions, whether it's from Strategic Wealth or from our Polish powerhouse here, Mr. Blasinsky, right? You've got to really dig into what you're doing fundamentally, whether it's with your spending, your savings. Maybe some of you are losing your jobs or you're fearful of losing your jobs and setting yourself up the right path because. I think that there's a lot of things that can and will happen depending on what our government does. And I still think that no matter what they do, there's no way the market settles where it is. And when we talked on the last show, when we talked about technical versus fundamental analysis, we talked about the 2990 level, which we've surpassed.
Which we broke through,
We broke through. And it's either going to hang out here or it's going to carry on, depending on what happens if Trump tweets something today. And who knows what happens, or if he gets angry at China, even more angry.
The thing is, technicals are important. We talked about that last podcast, but really right now, what you mentioned before about the economists they don't know what's happening. It's because of fundamentals. Fundamentally, we don't make any sense. So fundamentals have been very ignored.
You don't make any sense?
Fundamentals don't make any sense.
So you said fundamental, we don't make sense.
Fundamentally,
you said we. I don't know who we is.
Fundamentally, we, the market.
This guy doesn't make any sense.
The market.
You got a mouse in your pocket or something.
Yeah. Why did we hire you?
I don't know. I guess it don't make sense. But the market doesn't make sense right now fundamentally. So what's important is if the market can continue to be irrational and not make sense theoretically, right? Mm-hmm. But there's going to come a point when fundamentally we have to come back to at least the mean, right? We call that mean reversion. So,
just that's what's going to happen to the housing market.
Exactly. Yeah, it's all mean reversion.
Because 7% average growth over the last 10 years is completely normal.
Yeah, no, it's not.
No?
No.
Oh,
But
man.
so it's gonna be interesting to see what happens. But I think that's what's blowing people's minds is these technical traders kind of are trading off technicals, but we just continue to go up. I think technicals need to be thrown aside right now, and you should start really looking at fundamentals because I think it's going to start to turn.
Oh, the Fibonacci kid is backing off his love.
Fibonacci kid is going away from Fibonacci.
What's the Fibonacci number?
61.8.
Come on, what's the full number?
I don't know. It's not 3.141592653.895 though.
That's what I was waiting for.
This guy.
I wanted him to go with pie because I like pie.
I do like pie. I like apple pie.
There's actually a place in Lakewood I forgot about. They make Concord grape pie, and I can't think of the name of the place, but you can only get once a year.
Ooh,
It's fire.
it has to be good.
Yeah,
Once a year thing.
it's a well. You got to wait for the grapes to grow. You
Well,
can't
yeah,
just
well,
like
yeah.
go to the grocery and get some random
That's what
grapes.
makes it great.
Yeah,
True.
they're like, check out our awesome Concord grape pies. It's going to drive me nuts now.
Yeah.
But ultimately, at the end of the day, as I'm looking at my phone trying to figure out, like, you know, what pies are being made in Lakewood, and then I wanted pierogies from the beginning of the show.
Here
I'm
now.
starving. I didn't bring lunch today, and now I'm hungry.
I mean, what's your take on what pushes us over the top? I mean, people at your firm, I'm sure, have some kind of thought process as to what's going to be the tipping point for us to kind of retest prior lows. Do you even think we're going to retest prior lows?
Well, a lot of the research that we're reading, says there's a good chance of a pullback, but the lows are probably already in. And I think part of that's just going back to, like Luke said, looking at the fundamentals. People are really starting to look out to 2021 and 2022, and I think that's getting more and more optimistic. Fauci coming out and saying that we could have a vaccine by the end of the year. Yeah. And I think that's really it. I mean, we need a vaccine, and I think we got kind of away from that. Is that this is a healthcare issue. This is not, the market's not necessarily.
It's a confidence issue too. When you get the vaccine, right, people are confident to go back out and do their daily thing.
And I think it's hard to say, if we don't have a vaccine by this day, everyone's going to really freak out.
Right.
So you need the vaccine. You need to hope that this doesn't flare up again in the fall. If we have to shut down again, I think that could be a catalyst to retest the lows.
Well, you brought up 2021 and 2022 as well. Fundamentally, if you add the earnings multiple on there, you're still expensive in the market, even if you put 2021 multiple on the market. So that's why when we say fundamentally we're overvalued, if you put a 2021 multiple on the market, it's probably trading at 21, 22 times, which is still very expensive compared to 16 times regular average PE in the market.
Correct. So that's why when I look at it in general, I feel like fear can drive some of the issues. And just like people who like to make their rent payment on the first of the month, if that spigot is shut off on July 31st of that $600, there's no way that we go into August 1, with an up market.
Right.
It's not even plausible. Like, they're going to freak out and go, the money has stopped.
Yep.
Stop dead in its tracks. You've cut off half of people's cash supply. And that's where I see at some sort of contraction, and bringing us back down to earth, because people are going to freak out.
Right. Yeah.
If no one's spending any money, right? You can't even now go to Walmart, right? You can't go to CVS. You can't go to Dollar General, right? You can't support those companies that are doing well. You can't go to Target, right? You don't have the money to.
Right.
So that's where you hope that there's going to be some sort of agreement kind of midway saying, if I was a politician, if it was my job to do it, I would say we clearly can't shut the spigot off, but we need to turn off the flow a little bit at a time. And whether that's 600 to 450 to 300 to 150 to done.
At least getting people thinking about it. Like,
Hey, guess what? This month you're getting
the
100.
clock's ticking.
Yeah.
We get down to 100, the spigot's off. Right?
But do you think our politicians could ever get together and actually make a reasonable thing together?
No, it's election year.
Right. So they're going to go.
See, that's the thing too.
We're forgiving all of your student debt. We're giving everybody a Maserati.
But they don't really realize that they're paying it back through taxes, probably more in the long run.
Correct.
So that's the thing. You have to look at all the variables.
There's no free lunch, like I said.
There's no free lunch.
There is free lunch.
Not in my world.
Here?
Well, if you guys had sandwiches, I'm bigger than you. Would just take your
You
lunches.
can start bringing me lunch every day if you want.
Oh, and the place that makes amazing Concord grape pie, and you got to support your local restaurants, is Peppers in Lakewood, Ohio. Unbelievable. I just start harassing them at the end of the summer when grapes are in harvest, because it is I'm looking at a picture of this pie.
Yeah.
I'm looking at a picture of this pie.
Pies are here.
I see it right there.
I ate an
It's
entire
really
pie.
good, it looks like.
I ate an entire pie.
Support small business.
Look, you're going to show you a picture of that pie,
Oh.
right? Hold on. I mean, I think I have pictures on the inside, but this
That
is
looks
what
like a pie with funnel cake, like the funnel
this
cake.
whole
Yeah,
top.
that's great.
This whole top. That's dude, it was just sugary, delicious.
You guys
goodness.
got to see this.
I can't show it to you. It's small. Can we zoom in? No, don't worry
We
about
can
it.
edit it, dude. Post segment.
No, we'll just send a picture of it. At any rate, hey man, it was really cool to have you in today. Love talking about just general stuff, drinking kombucha, what all the cool kids are drinking.
Millennials are drinking.
Millennials, is that what you guys are
Guys,
called? The
kombucha.
millennials?
I don't know. I think
Someone told me
I think I'm on the cusp with Gen Z. And
Yeah, we're on
millennial.
the cusp.
I don't know what I am. All right, I'm 1980. What does that make me?
Old.
Old? Fair enough. I'll see you outside at recess. At any rate, man, great talking to everyone. And as always, you've worked 20, 30, 40 years of your life to gain what you have. You deserve, honestly, sophistication, you deserve dynamic, and you deserve strategic. Check me out at trg.swpconnect.com, and we'll see you next time. Take care.